The tech sector is coming off its best week of the year as measured by the NASDAQ, which rose 6.6%. NVIDIA having the biggest impact on the index, accounting for 23 points. Tech and specifically AI-related stocks among the biggest movers last week. The global X Robotics and AI ETF, ticker BOTS, jumping 8.5%. The ARK Innovation ETF surging more than 18%, its best weekly performance since the fund's inception back in 2014. Among the latest developments, Alibaba's Ant Group winning approval from the Chinese government to release consumer and professional AI products powered by its bilingual language model to the public. And Elon Musk unveiling a new chatbot called Grok from his XAI startup. It's modeled after The Hitchhiker's Guide to the Galaxy and is designed to answer questions with just a bit of sarcasm. Musk says Grok will be available for X premium users. But while the promise of AI is giving the markets a boost, people are still sounding some alarm bells, including SEC Chairman Gary Gensler telling MarketWatch last week, generative AI has the potential to revolutionize the way we invest, but could also spark the next financial crisis. Let's talk more about this now with Dan Ives, Managing Director of Equity Research at Wedbush, and Cyrus Mayawala, Head of Investment Research at Global Data. Gentlemen, great to have you both here. Dan, I'm going to start off with you. One of the things that Gensler's really worried about is what he calls a monoculture. Basically, everybody piling into the same investment because they're all being guided by the same AI tools. Is that a real risk?
Look, I think ultimately it's a risk, but that's why you have to really understand who's going to be leading what I view as this AI gold rush. I think when you look at Microsoft, you look at Google, you look at names like Palantir, that's who's leading it. Just because someone says AI in their conference call doesn't mean that they're an AI play. But no doubt, it's a risk. But I believe this is really a revolution that's playing out in terms of AI for the coming decade.
So, Cyrus, over to you. Is this a risk that investors should be mindful of? Is this a risk that financial firms should be mindful of?
I think AI is one of the fastest growth tech cycles we've ever seen, and I think regulators are behind the curve. I mean, as Elon Musk said to Prime Minister Rishi Sunak last week in the UK Safety Summit, he said AI is growing in the order of 5 to 10 times per year. That means in 24 months, it could be 25 to 100 times as powerful as it is now. And that leads to the issue of trust. You know, if market makers are linking their trading systems to capital markets, you may have a trust problem if markets react in a way that you don't understand. And a lot of AI system developers don't understand their own models.
You know, Cyrus, you're hitting on something very important. When it comes to AI, there's a risk of hallucinations. That's basically the AI giving out inaccurate results based on limitations in the model or even biases in the model. Cyrus, I want to talk to you. You're saying that regulators are behind the curve when it comes to AI. Is there a way for them to catch up when it comes to AI investing and resolve some of these issues about potential hallucinations and other risks?
I think they need to put trust back in the system. And trust is damaged by three things. The first is, as you said, some models can hallucinate, especially large language models. The second is widespread information. So depending on what inputs you have into the models, deep fakes and other misinformation tools by bad actors can impact the result. And the third, this is the most important thing that the tech sector can fix, is a lack of explainable AI. In other words, you've got to be able to understand how the model works and what it's going to do. And regulators have not regulated so that is a legal responsibility yet.
So, Dan, I want to come back over to you with a similar question. You've been one of the loudest voices on the potential of AI and how it's going to power the market. You mentioned that there's certain companies that are leading AI. So let me ask you that same question, not only about hallucinations and the risk, but then if the AI hallucinates, who's responsible? Would it be the companies that are putting out the models? Would it be the firm that gets the model from one of these companies? How do you deal with that possibility?
Yeah, and Cyrus raised great points. Look, right now, regulators, they're in the right lane going 30 miles an hour, and the technology is going 90 miles an hour in the left lane. That's also why self-regulation is so important, but ultimately it's going to come down to those vendors. It is risk in terms of hallucinations, and that's why I think Gensler brings up great points. This is something that's going to be a balancing act going forward, especially as more consumers and enterprises use AI, really, I think, on an everyday basis as we go into the next, call it 2, 3, 4 years.
So let's come full circle. And Cyrus, I'm going to start with you right here. The monoculture, the risk there. We have seen algorithmic trading, and we've seen a lot of sharp moves in the market due to that. When you inject AI, specifically generative AI, into the markets, how big of a risk is it in the short term and the long term as some of these kinks are being worked out? And if you were able to advise some of these financial firms that may adopt them, what would you say the number one thing is they need to pay attention to?
I think they need to look at how these models work, because there's a risk of, if you look at cloud, there's just 2 or 3 big players in the world. It's concentrated amongst them. If you look at AI, there's a risk that there could be just 2 or 3 big players. I mean, Microsoft this week is launching Copilot. It's the first company in the world to take generative AI into a mass market commercial proposition. Google, which has equally good at AI, still hasn't done that. There's a risk of overconcentration. You add that to the fact that there's no referee in capital markets when it comes to AI, and you've got a big problem, because it's a little bit like playing a football match and nobody knows what the rules are and you have no referee.
All right, so Dan, over to you. I know you're just coming back from a big trip to Asia, talking a lot about AI and tech more broadly. As we look ahead to the possibility of generative AI being used in investing, what do you see as the biggest, the number one thing that a lot of financial firms should be paying attention to? And as you mentioned, the companies that are going to design the models, what should they pay attention to when it comes to using these models for investing?
I think it's understanding the model, and it's making sure that the vendors are credible and they've done their due diligence. I think that's the risk. If you don't do due diligence and you start to just go with any of these AI plays, there's a lot of beware in terms of where this could ultimately go down. But that's also why the safety blanket, Redmond, in terms of Microsoft, what we see happening there from an AI perspective, Google, that's why I think Palantir is going to really be just a massive beneficiary of this, because of how these companies have proven. And there's really, from a model perspective, that there's little questions relative to how they've proven it.